Dear friends, welcome to Weekly View on Markets. Indian markets show some kind of consolidation despite the uncertainties in US-Iran conflict. Confusing statements keep coming out from unconfirmed sources about peace talks. Markets are sustaining about crucial support levels due to buying at lower levels by institutional investors. At the same time, we see pressure at higher levels due to uncertainties. Global geopolitical developments and Hormuz Channel blockade will be the key drivers for the markets in the coming week. Investors can adopt a buy on a dip strategy and they can accumulate good quality stocks at lower levels. Mutual fund investors should follow SIP route for investment. They will accumulate more units at lower levels and they should have patience, should not worry about the short term volatility. Nifty has closed at 23,719 with a gain of 76 points, that is 0.32% gain. Bank Nifty has closed at 54,055 with a gain of 345 points, that is 0.64% gain for the week. Nifty Midcap Index has closed at 61,389. It has gained 822 points. It is a gain of 1.36% for the week. Small Cap Index has closed at 17,956. It has gained 0.41% for the week. India VIX has come down by around 4.68%. India VIX closing at lower levels shows that the panic in the market has come down. The volatility also has come down. There are equal number of sectors going up and also equal number of sectors going down. That is why the market is consolidation during this week. Information technology sector gained 4.31%. Realty sector gained about 2.39%. Oil and gas, energy, private banks, NBFCs all gained around 1 to 2%. Manufacturing, commodities, infrastructure sectors were positive, but they were consolidating with small gains. Media sector lost about 4.29%. FMCG sector lost 1.57%. Public sector companies, consumer durables lost around 1%. Healthcare, PSU banks, pharma, and metal sectors were consolidating with small losses during this week. The sectoral gains and losses also indicate that the market was consolidating during this week. This is the chart of Nifty index. Nifty index has support at around 23,500 shown by this support line, and Nifty index has resistance at around 24,750 shown by this resistance line. Nifty has to take out this resistance line, then we'll see a good up move in Nifty index. This is the chart of Nifty Midcap Index. Midcap Index has got support at around 59,400 shown by this support line, and it has got resistance at around 61,300 shown by this resistance line. Nifty Midcap Index recently hit all-time high of around 61,800, and After hitting this all-time high, it has corrected. Now it is consolidating, and the chart structure looks quite good. He is likely to go to higher levels in coming weeks, but it depends on the peace talks between US and Iran. This is a chart of Nifty small cap index. Small cap index has closed at 17,956. It has got support at around 17,750 shown by the support line, and it has resistance at around 18,750 shown by this resistance line. Small cap index has to take out this resistance, then we will see small cap index going to higher levels, and small cap index all time high level is at around 19,600. It will take time for small cap index to go to the previous high levels. This is a chart of Bank Nifty index. Bank Nifty index has good support at around 53,250 shown by this support line, and it has got resistance at around 55,500. Bank Nifty has to take out these resistance. After that, we will see Bank Nifty going to higher levels. And Bank Nifty has hit a all-time high of around 61,500, and it will take time for Bank Nifty to go to those levels. Now let us look at some of the macroeconomic and market fundamentals. RBI foreign exchange reserves is at 688.89 billion US dollars at the end of this week. The reserves has come down by 8.09 billion US dollars during this week. Foreign exchange rate is at 95 rupees 61 paise for $1. Rupee has depreciated sharply in the recent weeks. The sharp depreciation of rupee is putting pressure on Indian economy. Dollar index is at 99.29. Dollar index has slightly gone up from around 97 level to 99. The dollar index going up and rupee depreciating is a cause for concern, and along with the crude oil price, which is at quite higher levels, is putting pressure on Indian economy. The higher crude prices have inflationary impact on the economy, and it is not good for Indian markets. Brent crude price is at 103.5 dollar per barrel. So as long as crude remains above $100, it is a cause for concern. FIIs continue to sell. They sold 7,572 crores in equity during this week. DIIs continue to buy. They have bought 17,128 crore in equity during this week. Continued FII buying is supporting the markets. It is preventing big correction in Indian market due to FII selling. Tussle between US and Iran is likely to end as per media reports, but these reports are unconfirmed. There is no clarity from late on Saturday. There is a tweet by US President Trump which indicates that soon there is going to be a peace deal between Iran, US, and Israel and other Arab nations. So this will be a good news if it formalizes quickly. And Hormuz Tunnel also is presently blocked. The blockage continues. If this peace deal gets formalized quickly, then the Hormuz Channel also may open for ship movements. Indian markets show positive undertone. The charts also show the similar structure. We see buying at lower levels. And this is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer your friends. You can ask your questions, which I will reply. We'll see again next week. Thank you.